It's Gary. I did my scans. I hopped on early. My back is hurting. So if I go off and just be grumpy in this episode, understand. The Qs yesterday, it was a good day. Hopefully I did buy a stock yesterday. We're going to go over kind of what I see with the bond market, blah, blah, blah. Tesla just crushed it. Absolutely crushed it. I was completely wrong on that one. Interesting analyst look at that one. GEV crushed it on earnings. We'll go over a great look at utilities, an article that looks at utilities. PSIX, which was a top quant stock. CLX Alpha Picks, which is a great one. Meta got a new price target. Zoom with a trading strategy. VKTX, which is Viking Therapeutics, got crazy pump. And I could be totally wrong about Palantir being overvalued because Alex Karp just went off on it. DXCM, Deckers, which is Hoka brand, Capital One, Western Digital killed it, an Apple preview, and then a social request that actually led me to actually buying the stock yesterday. So, yeah, let's take a look at first the Qs. We talked about it. They're trading at 494. Here, October 23rd was 2 days ago. You saw this little, it dipped. Was it a buy the dip? I don't know. I mean, we're heading into the election. The VIX is at 18, I think, right now. So I can't imagine that the VIX doesn't spike between now and election. You've got huge earnings next week. There's a lot coming up. But let's start the broadcast with a little lesson, okay? Bill Ackman, who's a fantastic investor, okay? He lost $400 million, and within a month or two, he got out of Netflix. So this was the drop that you saw in Netflix. I think he bought somewhere in the neighborhood of January, which would put him around $400. This one dipped down below $200. He got rid of it below $200, okay? And we're not talking like he bought 10 shares of it or 20 shares of it. He lost $400 million in this trade, and he just gave up on it. And I remember him on air saying, you got to know when to fold him. And he folded. He folded at the low. It is up in just 2 years, 2.5 years. 324%. He would have made an absolute killing. So a little lesson, Peter Lynch yesterday, he talked about how he got out of things too early. Understand that even the best make mistakes. That's why the market and managing other people's money is a skill and shouldn't be criticized. It's just a reality. You will lose money. And it's not, I've lost money. Everybody, if you hear somebody say it's a no-lose game, that's a grifter, a scammer. Okay? Simple as that. A slide in Treasury yields yesterday gave the S&P and the NASDAQ upward momentum. Again, the 10-year Treasury notably cooled off after 3 months of breaking 4.25. This has an analyst said this has everything to do with the decline we saw in interest rates yesterday. These two indices don't like higher yields. They just don't. The Dow lagged on Thursday, sliding over 140 points. That was due to IBM and Boeing. The major indexes are tracking for the finish this week with losses, which would snap 6-week winning gains on all three. The Dow fared the worst with a drop of more than 2% on Thursday's close, while the S&P and NASDAQ have shed 0.9 and 0.4 respectively. If you go and you look at a weekly, you're going to see green candles, and then you're going to see red. Couple red. Here you're going. You opened with the Qs. Again, it tracks the NASDAQ. You're opening with the Qs at 495. You're closing at 494. So you really haven't seen even this one going back to September 9th. You opened at 453. Your low was 449. Your close was 475. So that's September 9th week. We just haven't seen a ton of movement from this index. Now, if you go and look at something like SPY, you've seen a little bit of movement on the weekly. A little bit, but it's still an upward movement. And we're still over that 565 all-time high that we set back there in mid-July. So it's going to use that as its low point. And that's what I believe. Because HSBC is bullish on the S&P and it ups its target to 5,900. You can read all about it right here. Read all about the S&P. And then you can trade SPY or VOO. The reason I like to look at SPY is when they come out with that 5,600 year-end price target. Was it 5,900 price target? SPY, that would be 590. We're trading at 580. It's 10 points. So if you believe that the year-end price target is 5,900 on the S&P and you read this article, it wouldn't make sense to try and time it just buy today because 10 points is 10 points. That's it. So look at those year-end price targets. You can just Google them. Major banks, year-end price target. You can see a lot of them are at 6,000, which would put SPY at 600. It's just bond rates are going to do it. And then we've got the election. So you've got bond rates rising in a lower yielding environment. Where the Fed wants to cut. You've got an election coming up that may not be settled for a week or two. You've got next week huge major Mag 7 earnings. So and the VIX is at 18 average. You've got all of that, and your VIX is at 18. So I agree. I think we wind up the year higher. I'm just not putting a ton of capital work. And yes, I bought one yesterday. Now, Tesla hit 260 yesterday. Let's look at the chart first off because that 260 is absolutely a resistance level and it pulled off of it yesterday. The high yesterday, 262 in the afternoon, 262. The RSI on a 4-hour quickly became overbought. It's at 73. We can look at this weekly chart because the weekly chart, you broke through the 200-day. Okay, this weekly chart, you broke through the 200-day, which we haven't really broken through. We did for a slight time for a couple of weeks in September, but we haven't held it. Is this going to be the hold? It's Friday. I would not buy this on a Friday. You're down 1.52%. I would not buy this on a Friday. If you're sitting there, I would hold it. There's no reason to sell it right now. But what's interesting about this, we're trading at 256 and it hit 260 yesterday. Notice, and Sawyer Merritt, who's a big Tesla bull, many Wall Street analysts have raised their price targets today. Okay, Bank of America went from 255 to 265. That's the high of yesterday. Goldman Sachs went from 230 to 250. We're trading at 256. Fulton Securities went from 282 to 330. That is the street high, 330. Okay. Canaccord went from 254 to 278. Again, we're trading at 265. 260 is resistance. RBC, 236 to 249. Many of these are not over the price where we're at right now. So the valuation does matter. Again, you have to realize that Elon speak is very much it's going to happen at some point in time kind of thing. And when it happens, like yesterday where they, cut costs by 6%, a lot of those things are not repeatable. So next quarter, they can't do it. If they don't launch the Model Y refresh, they probably won't meet demand in the fourth quarter, and they probably won't beat last year's deliveries. That might take them down. But you can't argue. You just can't argue with how much Tesla has done good. They added more in market value, market cap, in a day than the combined value of GM and Ford. Again, GM is a alpha pick, and the alpha pick, this has been a strong, and the evaluation is nuts. It's just, the momentum was bad for this one. This one, not bad momentum. It's got a 4.90 on the quant. Wall Street says it's a buy. Their average price target, 57. That's 10% from where you are today. So I do think that GM has an ability to grow a little bit, but you've got to understand, in my mind, this one has really shitty management. That's the thing. just know that, yes, who was selling Tesla yesterday? It was Cathie Woods. It was Cathie Woods. She was selling. They sold 85,000 shares. Now, mind you, that is part of her strategy, is that she just sells when it pops like that because they dollar cost average. It's not like 85,000 shares is all that she has. That's an enormous, enormous sale for most people. That's like a drop. That's like you sell, if you have 100 shares, that's like you selling 5. So, top discretionary names outside of Tesla if you wanted to look at something else. This is a good article. I mean, it just lists the top 10 based on the quant. So if you want to read that article, I like that one. GEV, which is the spinoff from GE. This is the power one. They slipped on miss. This was an interesting one because they slipped on a miss to remove some vineyard wind blades after incident. So they reported earnings. They missed. They were up 6%. That's how powerful. That's how powerful the energy trade is right now. GEV, I think this one's a good qual. It's not covered by the quant. Understand, it's not covered by the quant. We will go over the valuation on this one. It is an IPO. The average price target, you have 25 analysts that cover this. 10 have it as a strong buy. But their price target is 291, which is 1% downside. So don't buy the hype on this one. We'll look at the chart to see if we can trade it. But I would argue that this one, the valuation, they're not making money. The growth, they're growing 12% revenue year over year, which is great. Profitability, 17% profit margin. The sector's at 31. So I again, this one is in there with VST and other ones. GEV, if we want to trade it in the 4-hour algorithm, let's see how that one does, because it was just an IPO 7 months ago. But it got you in here at 175. We can take a look at this. The algorithm makes you 42% because it does get you in and out here with some losses like 3%, 4%. It got you out with a, looks like an 11% loss there, just on a huge candle for some reason. But if you, and it got you in only at May 3rd. So it didn't get you in at the IPO at 135. It got you in at 159. The algorithm makes you 42%. Now understand that's 5 positions over 7 months. So it's not even once per month. Your average win is 36%. Look at where it got you in though, 175. So if you were into this one and you said, hey, this one's got more room to run, boom, you're up there. And you're at 297 right now. The MACD has reset. You've got some divergence here. So here we'll show this one. We're going to go this one. Look at how during this time, okay? This time you start at 254 and you go up there. And then look at this. This is what's called divergence. Notice during that time frame, the price is going up, but the MACD is going down. And the RSI was going down. That's bullish. That's bullish divergence. So GEV, good one. I like the company. I'd probably wait for it to pull back, but if it pulls back, you know what? Let's make sure this one is on our, it's on our watch list. I thought it was, but make sure you're in that one. I like this one. Again, the momentum is great. If you want to know the peers of this one, it's Vestra Wind Energy, NewScale Power, Bloom Energy, Net Power, and Net Industrials, heavy electrical equipment. That's essentially what it is. Now, let's talk about utilities. We're talking about power. Steve Kress just put this out. I thought this was fantastic. This is an absolute, the AI revolution. It lists all the utilities, okay? If we go over to Seeking Alpha and we look at market data and we look at the U.S. equity sectors, okay, over 1 month, what's number 3? It's utilities, up 2%. Number 1 is financial. We've talked about financial. That's great. Year to date, utilities is number 1, 28%. Over 1 year, utilities is number 3 at 38%. Financials 46. Technologies 38. Over 3 years, utilities is 4, number 21. So it's leading year to date, but long term it hasn't. So it does have, look at the 52-week range. It's up at its 52-week high. And these are the top stocks based on the quant that you can look at. Okay, obviously there's a few in here that he goes over. I think this article was great. I read it. I liked it. You know, we can look at XLU. on the algorithm. See how that one performs in Trendspider. XLU just got you in at 81.15. Just got you out with a 16% gain. And it got you right back in. Again, you take a look at this from a weekly perspective, and we're seeing this one in this channel. We've talked about this channel before. I put this channel in. So when you got to the bottom of that channel, I said back here in October 2023, I said this one looks like it's ready to bounce. And we had some bumpiness in the road. But that channel's still in play. You're at the top of that channel. Will it continue? Remember, this is an upward moving channel. So it's not like if you buy here, you're automatically going to come back down here. It just means that maybe you continue higher. Now, one that everybody was asking, there were some people asking me about yesterday, PSIX. It dips on basically one of their big investors sold a bunch. And this guy said, buy the dip. He's right. I mean, he's been right. Up 15% since he put out this article. But if you go over here, if you look at the big seller, I think it was risk include market volatility despite a major shareholder was selling. That's essentially what I found. I don't know where I found it, but this guy does a good article on PSIX. It's still, the stock is still trading. I don't know why the PSIX, if we put that in, it said delayed. And it said delayed in the, not even the pre-market. But just know the algorithm got you out yesterday with a 4% loss. This one you win 287% in the algorithm. But that run from $2 all the way up to 20, just brilliant. And like I said, that 20 was resistance. And it was a long-term resistance. If we look at a weekly, if you just look at this one from 2019, you can see it popped up here to 20. It's probably pulling back. The only support that you have is probably that 12. So if you get down towards that area, PSIX might be a buy. Again, this was the top quant stock. I did a little research yesterday. It was basically a seller. Now, AlphaPix put out their CLS. CLS rallied 18%, boosted by network switch demand. This is an AlphaPix, but I wanted to point out in this summary that AlphaPix posted about CLS. Let your winners run. If a stock price is more than doubled in our portfolio, it gets put into our good to great category and is now subject to the following set of rules. This is why I promote AlphaPix. They have absolute rules to when you buy and sell. So if a company has doubled or more, receives a sell or a strong sell recommendation, we will only sell the initial investment and let the rest of the position remain. So they only sell the amount of money that they put in. If another sell or strong sell rating is triggered, and if the position does not have a value greater than 2 times the initial investment, it will be entirely sold from the portfolio. So, again, AlphaPix is just one here on the link tree. The bundle is what I would suggest because you've seen me look at all the articles and everything. That gets you Seeking Alpha Premium and AlphaPix. And you save $159. But that's the full that's the full suite that I would suggest from Seeking Alpha. That's it. That's what I have. I have the premium and I have the AlphaPix. And you might say, well, why do I want this portfolio if I can do all the research myself? Some people don't feel comfortable. And I will tell you from somebody who subscribes to this, it's 2 data-driven stocks every month, once on the 1st and once on the 15th. So we have one coming up next week. Of the last 5, they're up like 10, 15%. The key to this is they alert you when to sell. And the summary that you just saw with CLS, where they give you specific rules, that is set out and it's rules-based. It is a 100% fantastic portfolio because look at the gains. During a time when the S&P was up 51%, this goes back to July 1st, 2022. The S&P's up 51%. You say, that's great. I can buy VOO. I can buy SPY. I can do great on those. This one's almost tripling it at 145%. It's unbelievable. The actual I don't know why. I guess I gave a thumbs up, by accident. But there you go. But yeah, $449 if you want it by itself. That's why I would suggest the premium pack. The premium comes with it. Again, you save $159. But CLS is a great one. I wanted to bring that one up, and specifically the rules. I'll post that in the newsletter today. Now, Meta. This was interesting. Meta, new price target of $6.75. And what they're arguing is, this was on when Josh Brown was on. Josh Brown is one of my favorites. But Meta with a new price target of $6.75. Meta has replaced Google as the set it and forget it blue chip holding, offering investors a growing, healthy core business and an AI winner story and lower terminal risk. A shareholder-friendly management team. And yes, Meta is now considered a shareholder-friendly management team. But $6.75, you're trading at $5.73. You haven't broken through that 600. That has been a resistance level just right there as we've pulled back. The algorithm has you out at 10%. In pre-market, you are up 1% at 573. But again, this is a price target. Now, I tend to agree with Josh Brown. And don't throw Google out here. Do not throw Google out. I think Google is interesting. They've started placing ads within Gemini. And Gemini also has been fairly restrictive. I don't exactly know the rules around it, but I know I can't create pictures of people for free. You have to upgrade to Google One, which gives you a bunch of other features. But they are adding ads and they're charging people. So they're starting to monetize this. I like the gap up here to 182 to get filled. But you've got a lot of issues right now with Google because you've got Department of Justice stuff. You've got the EU stuff. You've got a lot of issues with Google. But in the quant, it's a strong buy. And, you know, if we talked about Tesla, if you want the current one that's doing full self-driving cars, it's Google. It's with Waymo. So one that Josh brought up yesterday too is that, and he started trading on this. Now understand, he's invested in this. So he bought down at a significantly lower price. But this is Zoom. Okay, this is Zoom. And you can see the trading opportunity that Zoom poses. Now, in the 4-hour algorithm, it just doesn't work. And it's because it goes up and down, up and down. Over 24 months, it's 33 positions. That just tells me it's just too volatile, too much. But what Josh said, and he said this pretty clearly, is to take the weekly chart, okay? And you've started to get a 50-day that is turning around. And that 50-day turning around, he said, if you want a just set it and forget it kind of stock, because this one has been basing down here, he said, just use the 50-day as your stop loss. He said, check in on it every Friday and make sure it hasn't broken through that 50-day. And continually each week, as it hasn't broken through that 50-day, just put that 50-day as your stop loss. He said that's a good trade. Now, mind you, he's in this at about $40, I believe. So he's investing this one. If we go and we look at Zoom here in the Seeking Alpha, it's a hold from the quant. And the reason is the valuation is a bit too much. Now, the PE, nothing, next to nothing. The PEG, good PEG ratio, but it's their growth that's the problem. And the revenue year over year on growth is only 2%. But understand, these guys have a fairly low bar to set. So the revenue may start growing because the profitability is there. 75% freaking profit margin and their momentum. They're up 24% in 3 months, 17%. The revisions, 31 up on earnings per share, 29, none down on earnings per share. Not 29 up on revenues and only 2 down. So the revenues might bring this one down. They don't report until the middle of November. Right now, the weekly, the RSI looks like it's a little bit overbought, but I like that strategy. Okay? I like that one. The other one that he liked, just so you're aware, is Live Nation, and it's LYV. LYV is the symbol. He said this was a price target to 137. It's trading at 116. This one, has been, the 4-hour algorithm over 24 months, you make 25 trades. That's much better. It makes you 92% versus 46% if you bought and held. The algorithm had you in here at 98. I don't think that's too late to push this one up. Now, there are Department of Justice stuff here. Hold on. Penny, I love you. LYV right here. Let's go and look at the summary. It's a hold in the quant. The valuation's an F, and that, they're not making money, and their forward PE at 83. The PEG ratio, bit too high, but their growth, 24% revenue year over year. Their levered free cash flow, they're losing 61%. Their momentum, though, this one's just been killing it. Live events are absolutely killing it. And when you go to Wall Street, there's 22 analysts that cover this. Their average price target is 123. That's a 5% upside. So if you put this on a list that if you see a pullback, if you're going to live events, I don't go to live events, but if you go to live events, put this on a list. And then if it pulls back 5%, go ahead and buy it. Go ahead and buy it. Another one, we're in an AI and GLP-1 market. Viking Therapeutics was up 21% yesterday. On Thursday, they reached a new 5-month high as Wall Street focused on updates on their obesity drug. That's it. And the obesity updates outshine Q3. So if we go and look at Viking Therapeutics, VKTX is the symbol, just so you're aware. Look at that pump after their earnings. Look at the pump. And then the afternoon had an inside candle. There's a gap here between 81 and 63. If this one pulls back, go ahead and buy it. I think this is on our watch list. Yeah, it's on our watch list. But let's take a look at it in the quant. It is a hold in the quant. Even the only problem is the profitability. They're not making money. The valuation, they're not making money. The growth, they're not making money. The momentum, great. You're betting on this as a GLP-1 winner. It's got an $8 billion market cap, and it's just this GLP-1. If for some reason something comes out and that GLP-1 kind of fails, you're screwed. You're screwed. But that's, it makes sense to put something like this. Look at the 52-week range. It goes all the way up to 99. You may see this one pump back to 99. Again, positive results. So take a look at that one. I thought it was good. Now, this is Alexander Karp. Karp is an unbelievable CEO. Unbelievable CEO. And yesterday he posted this. And he says to Wall Street, continue saying that we're overvalued. And I may be completely wrong in this. And again, he's out there. This is what you want in a manager, a CEO, where your stock is overvalued. He's out there saying, underestimate us again. And you can't argue with the performance of the stock. I really do think he is one of those. He is the Elon Musk of AI. And I like him. I like him like that. And I love the way that he speaks. I'm not a fan of his, love of war. But he believes that war brings peace. So I'm not, a peace-loving guy, just like everybody else. But he's aggressive in that nature. But I don't mind it. I like him. I really do. He's one of the CEOs that I would bet on. And I wish I would have held this stock. Now I'm waiting for this one to come back to some type of reality. And when it does, I will buy it. He is one of those people that I will absolutely buy on. Now, the biggest winners of yesterday, Skechers, rose over 7%. L3 Harris rose 4%. Let's go over it. Capri, with Tapestry. I'm not in that sector, but holy crap, Capri plummeted 46% because the judge blocked the merger. It's not going to go through. And Dexcom, the CEO screwed himself again. I mean, they despite reporting solid Q3 results with revenues up 2% year over year and revenue declined 2%, the company upheld its full year guidance forecasting stuff. It wasn't the sales team. FYI, it wasn't the sales team. And you're down 5%. Now, Deckers killed it. Skechers. Deck. This is the Hoka brand. They killed it. They are up at 173. This one is up 13% in pre-market. 13%. Where's 173? It's right there. It's going back to this 183. Okay? We can look at this. If you just put a trend line in here, we're just going to put a trend line in. There are people that I see on YouTube who trade with trend lines all the time. They do nothing other than put this line in and say, you know what? I'm going to touch 3 points. And if I think that's the support level, I'm going to buy it. And here, the low was 150. Boom, you're at 170. So you bet that they're going to beat earnings. Look, it's just trading sideways. I would suggest it's going to, the MACD, again, that's trading sideways. We've got that divergence. This one's going down. So there is some divergence between the RSI, the MACD, and the price. So Capital One killed it. Up 3%, beats on top and bottom lines as net interest income rises. So they killed it. One that really killed it, Western Digital, and that's on cloud revenue. Cloud revenue was 17% growth on cloud. That's Google. That's Amazon. That's Microsoft. Cloud. So what are we going to see? This, where are they getting it from? Maybe they're getting it from those hyperscalers. Who knows? As we head into next week, here's Apple. Apple Q4 preview. This made me feel good. The positive far outweigh the negatives. Last iPhone 16 sales data from China, robust. When combined with record install base and subscription revenue, the foreshadows a strong Q4. For the longer term, Apple's true economic earnings are much higher than its accounting earnings per share. Maybe they're not trading at 35 times forward earnings. Thus, its valuation is considerably cheaper than the current accounting of 35 times forward earnings. I like this. And here's the thing. This dude, this analyst, Envision Research, has June 4th, buy, up 8%. Let's see. July 22nd, buy, up 2%. Let's see. August 9th, buy, up 6%. September 16th, buy, 6.59%. So he's got some clout. Now, I heard from Brandon yesterday on Twitter, and he said, please talk me out of buying DRN. And so I said, real estate, it's a Thursday, it's triple leverage ETF. Do I really want to talk you out of it? Let's see. 4-hour algorithm got you in at $12. We're trading at about 13. Okay. I don't know that I necessarily want to talk you out of this, but, we just got out of a 52% gain in this one. The algorithm makes you 63%. It's 28 positions over 24 months. Again, it's a triple levered real estate bull. And he said, talk me out of this. And I said, I don't know that I really want to do it on a 4-hour. So let's take a look at a 65 minute. And the 65 minute doesn't perform well, but it did just get you in. Again, 12.58. So 12 seems to be the dollar amount that you're getting in. Okay. And then I found this strategy. And this is a strategy that I've had in here for a while. I don't even know if I include this with you guys. I'm going to include it in the newsletter. Okay. It's an 821 crossover. That's simply what it is. And you can look at this strategy. If you have Trendspider, I'm going to include it in the newsletter so you can import it. This one said buy at $13.19. And all of a sudden at $13, I said, this is interesting because do I want to buy this one? The algorithm over 4 years. We've gone back and we've tested 1,000 candles. That's 4 years because this is on a daily. So it's 4 years. Makes you 94% in this. Okay, 94% versus 29% if you bought and held. Your average win is 16%. Over 4 years, it only has 19 positions, but it's winning 53% of the time. And this one had a buy at $13.19, and I have a chance to get it at $13. You bet I bought it yesterday. I did. I bought it in Webull. Didn't buy a lot because it's a triple leveraged ETF, but I bought it in Webull so that I can look at it and I can look at the chart. I think I bought 50 shares of it. And I put that on Savvy Trader. Yes, in that portfolio, I put exactly what I bought. And it's because it's a decent amount of size. I don't bring it up. This was an interesting one. I thought it was great. Thank you, Brandon, for that one, because I think I'm up like 3% on that one already. It's not a ton of money. I'll buy lunch. But again, I will put this strategy right here, daily stock pick, algo, 821. It's just one of those strategies that I had sitting around in my Trendspider. And again, I like this thing. The reason I like Trendspider is I've got a bunch of strategies that I can test on stocks. And if it makes sense that I'm sitting there looking at a stock and I can find a strategy that I feel comfortable with, I can set an alert based on that strategy for when to sell if I buy. And that's why I love Trendspider. You want that type of ability? You want my 4-hour algorithm? You want this 821 algorithm? You want all the watch lists? Do you want all of the scanners that I use? Yeah, just use this top link at Linktree, linktr.ee/daily stock pick. It's down below. You can read it on the screen. $53 a month. $53 a month. That's it. $642. If you don't have a large enough account that amount of money is too much for you to spend, don't. Go and get your own free tools. Okay? Learn charting. It's important. This is just like, if you bought a one of those little electric bicycles, those little the Barbie mobiles that are battery operated that you charge up for your kids and they drive around the driveway. That's what a free tool is. You know what Trendspider is? It's the monster truck. You're running over that shit with Trendspider. Trendspider has all the bells and whistles. But if you don't know how to drive that little Barbie car, you ain't going to know how to drive Trendspider. It is not a plug and play tool. It is a chart. So ultimately, the only thing that matters on a chart is the price. But what this gives you is an ability to take emotion out of your trade. Because yes, the price is all that matters, but you can put in these moving averages, and you can do that on most free tools. You can put in the MACD. You can do that on most free tools. You can put in the RSI. You can do that on most free tools. What you can't do is backtest a strategy. Okay, the 821 cross up, you can't backtest it. You can't set up an alert on most free tools. Hey, when the MACD crosses up, give me an alert. You can't do that. So I thank you, Brandon, for setting me straight. I got DRN. And I'm up let's see. I'll log into Webull. And if you want Webull is the best free trading platform. It's absolutely the best platform. And that's on Linktree too. Go down to Linktree. Go to the 5th link down here. It's Webull. Get free stocks. It's fantastic. I have Webull. Let's see. My DRN position. I'm looking at it right now. I am up 3.5% on that one. 3.5%. It's great. And again, you can get that. Let's talk about some social requests from Spotify. Derek, Zeta seems to be moving along nicely. Should I buy the dip? Let's look at Zeta. I don't even know what Zeta is. Zeta is Zeta Global Holdings. Looks like the algorithm. Is this my 4-hour? Hold on, I have to check. Yeah, this is the 4-hour. The algorithm makes you 61% versus the asset makes 275%. I would say that dip right there probably looks decent. I mean, you're just getting out of a 71% gain. This one's flying up. It does not have a 200-day. So it's a rather new stock. Let's take a look at what Zeta is. We're going to go over here. We're going to go to summary. And Zeta operates an omni-channel data-driven cloud platform. So it's application software. They have a market cap of $6.17 billion. Short interest, 4.35. The quant has it as a strong buy. So it's been a strong buy since $10 and it's at 26. Again, that's how great the quant is. You've doubled your money in this one. Wall Street has it as a strong buy. Their average price target is 36. There are 14 analysts that cover this. When you look at the valuation, they're actually making money. Their PEG ratio going forward, 1.34. So their growth is good. Profitability, they make 60% profit margin, but some of these numbers, they don't look great. Got to see, but the momentum you can't argue. Absolutely buy the dip. This one, this one might be worth absolutely running into the 4-hour algorithm. This gets you out of a 71% gain. I'd probably wait until you're above, you have confirmation, but trade that chart. That's not a bad one. Derek in Europe, we're going to put that one on our watch list. That's a good one, because I'll scan for this one and we'll put it on the watch list. Again, if you're subscribed to my program in Trendspider, you now have Zeta on your watch list, so you'll get you can scan for it and see when it triggers an entry. Where to start? Hi Gary, this is Shane. Thank you for your content. I have a quick question that probably requires a long answer. If you had to start over investing in stocks with $1,000, how would you do it? I think the answer could be useful for people like me that may have a lot of responsibility, commit to trading, but are inspired to start by your content. It might be interesting to hear what your thoughts are. Okay. I wrote to Shane that a question like this is great. In that, hey, if I had $1,000 to actually invest right now, where would I do it? I wrote back to him. I said, hey, I opened up $1,000 account in Webull, and I've got now like $9,500 in there. Yeah, I've done it, so I know how to do it. But the difference is, $1,000 isn't going to change my life. If $1,000 is all you have, put it into VOO. Put it into QQQ. Do not try and YOLO that to 2,000. Again, 20% gain on $1,000 is $200. A 20% gain on 2 million is 200,000. But you're still making 20%. There's no difference between the percentage of somebody making $1 million. So if you can afford $1,000, put $1,000 and YOLO it. But understand, you might as well sports bet if you're going into stocks that make no sense. If you got $1,000 and that's your emergency fund for car repairs, for if you get laid off from your job, if you have some type of emergency, that's not invested. You should invest that in something safe like VOO, okay, for the long term that you can have access to. Yeah, or buy a bond or a 5% CD, something that makes you money. But unless you have zero debt, and this is part of my FIRE thought process, unless you have zero debt, because paying off your debt with $1,000 is way better than putting it into, and I'm not talking mortgage at 4.5% or anything that's below 6%. I'm talking about credit card debt at 13 to 18%. You pay that off. So it's a little bit dependent on that. Now, what would I do with $1,000 if I just wanted to YOLO it? I did it. I threw it into Webull. I traded triple leveraged ETFs. I traded Tesla. I traded MicroStrategy. I traded Bitcoin, IBIT. I didn't do Bitcoin directly because I don't like the fees. So I do the ETFs. I do IBIT, and I do leverage stuff with TQQQ SQQQ. I play the VIX with UVIXI and SVIXI. I play other things like that. And yes, I've been able to turn it from 1,000 to 9,000, but I would never do that with my large account. $1,000 isn't going to change my life. I could lose, I lose $50,000, $60,000, $80,000 a day on decent days. Oh my God, thank God I didn't lose $300,000, $400,000. And I was talking to a friend the other day. Again, you have to look at the percentages. If I were to look at the actual dollar amount, I might freak out. That's more money than I ever made in a year. And I lost that amount of money in a day. I would freak out. I would lose sleep. But the percentage is what you want to base it on. So asking me what I would do for $1,000, I would absolutely 100% put it into safety. Now, when you get up to $25,000 and you don't have the pattern day trading against you, I would start trading a little more risky. Start picking stocks. But until you get to that $25,000 mark, I don't think you should actually be trading something that you could lose. Now, if you're single, you have no kids, you're the only one that you rely on, kind of like me, I don't think trading single stocks is that risky. I think it's actually pretty good. So again, but I think it matters where you are in life, what the rest of your portfolio looks like as far as net worth. And I think the fire process in me kicks in is that I'm not going to tell you the $1,000 you should go into Apple, you should go into Google, you should do that kind of stuff, because I do think I didn't do it. But that's because I didn't care if I lost that $1,000. So hopefully that makes sense, Shane. And Shane and I had some good emails back and forth, and I tried to explain that. It's hard. Say somebody comes to me and says, hey, I have $100,000. Where should I start investing? That's a different story. That's a different story. Because I tell you, take $50,000 and you put it into something safe. And then the rest of the $50,000, let's start nibbling at some really risky stuff. Because it does depend on your age. But if you had $100,000 at the age of like 24 or 25, first off, you're doing really well. Second off, I would say you have time to be super risky. But if you're in your 40s and you have $100,000, I'd be a little bit safer. And that's where it kind of comes into, find yourself a financial analyst. They'll tell you all this stuff. The financial advisor like Stuart from Fidelity. He's great. And if you want a Fidelity intro, just let me know. Just email me. Brian from the Facebook group. He brought this up, and I'll put this in. This was a crazy one to me, but this dude has, listen, kudos to you, Brian, because you have found some of the most major ones. But LSF, this is Laird Superfood. I think it's this Laird, the Olympian dude, who does superfood stuff. I don't know. Maybe it's him. But $72 million market cap. That's his market cap. This isn't something that you're going to, oh my God, it's going to grow and it's going to be forever, blah, blah, blah. Wall Street says it's a strong buy. Nobody on Seeking Alpha covers this. There's 2 analysts that cover this on Wall Street, and their average price target is $6.50. That's 8% below where it is today. The quant actually does rate this, and they rate it as a hold. It has never been a buy. Okay, and the reason is because of the profitability. They're making 38%, but the rest of their stuff sucks. Levered free cash flow margin, they're losing 4%. But their growth is phenomenal. Their momentum, which I've said always trumps everything. If you bought this 9 months ago, you're up 704%. That means the $1,000 that Shane wanted to put in would be $7,000 in just 9 months. Yeah, I'm not doing that well with my Webull account. But again, this is one that just, hey, it's a low food, it's a hold in the quant, but it's a mushroom-based, low-calorie alternative food. It's on the rise. I don't know if this is Laird. I forget the Olympian guy's name, but he had let's see. Yeah, they give the website. It's Boulder, Colorado. It might be him. The Olympian dude. He had a Netflix special. So let's go over some scans. This is where I scan for bullish stocks in my 4-hour algorithm, XLY. And the reason this got, this is XLY is all Tesla and Amazon. Gets an entry here at 200. Now, do I think it's probably going up even more? I do. I sold out, I think, at about 180. I took a bunch of money out on this, and I put it into other things. I've done well, but it's at 200. Again, this one over 2 years, the algorithm makes you 51%. Buying and holding makes you 41%. It's only 24 positions. So getting in, you have about a 50-50 shot if you're going to win. One that did make an entry yesterday, and I don't know why nobody's talking about this one, MicroStrategy. And you can see these blue lines right here. That's because I have an alert when to buy it. Okay, in pre-market, you are up 0.66%. But look at this. Over just 43 days, 43 days since the algorithm got you in, you're up 83%. And yes, I'm in on this. Yes, I've been adding to it. Yes, the algorithm makes you 1,437% over 24 months with 23 positions. So mind you, what this tells me is that I should have gotten in here at 125. But what this tells me is the indicators are saying it could go for another run. So let's take a look at the weekly. Is it completely oversold? Yeah, it is. Am I adding to it? Probably not here, but I'm waiting for pullbacks. And every now and then when it does pull back, I do add to it. but MicroStrategy is one. Another one, an alpha pick that we just went over, CLS, gets you in at 66. Do you want to get in at 66? Well, is it oversold? Maybe a little, but look at how it pulled back. And look at, even though the stock price is going up, the valuation is still there. Viking Therapeutics, we just went over that. VKTX. The algorithm gets you in at $73. $73. Okay. SoFi. We went over SoFi yesterday. The algorithm is saying it's going to continue its move higher. $8.24 was where it came in. So again, these tools are there to provide you help. They are good. Okay. And all the tools are here on Linktree, linktr.ee. Now, let me just make sure you all know this. I am on vacation next week. I am flying to Pittsburgh on Monday. I am flying back to Atlanta on Tuesday. You will not have a podcast. You may not have a newsletter. I'm going to try and see what I can do, but I know on Monday you won't have anything. Then on Tuesday, maybe when I get home, if I feel good, I'll start doing stuff, but it will be later in the day. On Wednesday, I have my property tax appeal. So I will not be on Wednesday. If I do it, it will be later in the day. So just understand, next week we have a huge earnings week. Next week is an enormous earnings week. On Tuesday, we have McDonald's, which just came out with that stuff. Do they rebound on really good earnings? You have Waste Management after the bell. You have On Semiconductor, which, by the way, just had a cross up in the algorithm. You have Google on Tuesday with Visa, AMD. It's first look at maybe, some of the real major semi players, AMD and NVIDIA. You got EA Sports. You got Chipotle. You have First Solar. Could that one see a rebound? You got Wingstop, which has just been crazy. You got Eli Lilly before the bell on Wednesday. You got Cat, AbbVie. You've got a ton. GE Healthcare, which I like. Microsoft, Meta on Wednesday. MicroStrategy. Could they announce that they bought a shit ton more Bitcoin? Probably. Coinbase. Robinhood, which has been DoorDash, which is the Motley Fool pick. Then on Thursday, MasterCard, Shell, Uber core portfolio. You've got a bunch. And then after the close on Thursday, this is a Halloween, by the way, next Thursday. It's Apple and Amazon, Intel, Atlassian. You got a lot. There is a lot. And then, again, the same thing. After all the major Mag 7 kind of stuff, you got Exxon and Chevron on Friday. So you've got a lot of earnings. And I won't be here for a lot of it. So take your pick. Maybe sign up for Alpha Picks. Find out which ones have earnings next week, because those have typically moved on earnings. Huge movers. So if you have any questions, hit me up. I will talk to you guys tomorrow. Or, I'm sorry, next week. Maybe Thursday. It's going to be a while. I'll talk to you later. Bye.
I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.